This is Rod Kusanen, Spoos for Risk, and it is the 29th of June, and you've been watching the market take progressive falls off of various upper and lower value areas, points of control, etc. In this video, we just draw your attention to the methodology that is being employed by us for using composite market profiles. Now, we run composite market profiles off of the lows, off of significant lows in the market. The most recent significant low is taking place around the 18th of May. And when we use that date, we generate an upper value area at 2443.50, POC at 32.75, and lower value at 02.5. Now, we also look at these areas of repair, such as right in here, where we have seen the market drop in recent days. Now, today, on the 29th, the market dropped to 24.02 and a quarter. That was not a random walk. It came right down to the lower value area. And we knew that that number was out there because of the method being employed for using the composite market profile. We use the low pivots. And that's important because if you're not using the low pivots and using some other methodology, you're obviously not going to come up with the same numbers. So here is our workspace where we plot these particular lows. All right. And the most recent significant low was using May 18th. Before that, we go back to March 27th and so on down the line. A significant major pivot where we saw a significant drop is right here on the 9th of November. That's the method we use. Okay? And using this methodology has worked. It's worked very successfully. So, brief video, but very, very important to have that methodology. And using the composite market profile approach for significant, the significant market profile numbers is very, very useful. And just pulling this forward, although we're taking into account the data that has transpired since the beginning of June. But you can see how we moved up to that line at 43.5, all right? Touched it again. That was already established, okay? That number was already out there. Of course, then we moved up into this high. We got overbought. And what was interesting, from this profile was this area of repair in here, which ultimately the market went ahead and moved up beyond, then finally went as high, as the upper range of the profile before we saw that big drop last week. But then as far as where did the market move down to, we used this date, okay, the 16th, for establishing a more recent profile, and that's exactly where the lows tended to gravitate to, right around 29, then right back up to 47, as they did here. Again, that area of repair, which we talked about, came right up there, then messed around at the previous high, right around 43.5, and then we saw this precipitous drop all the way down to 02.25 today. And of course, you can see moving up, we're going to test 24. So there you have it. And this area still needs, we need to get some repair in there, and we may do so. But once we break 02, you can see where this is headed. So then we're going to use a different profile once we exceed these numbers. We're going to go back even further. That's how we do it. I'm Rod Kusin and Spooman for Risk.